next one. We got it. We're on fire.
Yeah, we're on fire.
We're still rolling, so it might be ready.
Oh,
Nice. All right. Happy to be here, man.
Welcome back.
Happy to be here.
To Replace Your Paycheck. I'm Robert
Beautiful
Lettin.
Wednesday morning.
This is my colleague and friend, Francisco.
Valdivieso.
There it is. Really?
Yeah.
Valdivieso?
Valdivieso. It's phonetic.
Phonetic.
Yes.
And
do you know phonetic? You know, when I say phonetic, Spanish, which is what it is Spanish is a phonetic language, meaning if you write it, you can pretty much pronounce it the way it's written.
so spell your last name.
English is not. Valdivieso.
And you pronounce that?
Valdivieso.
And see, you put a little, is there a little
No,
over the
No.
dieso? Because you went dieso.
that's true.
Yeah.
There's
But
not.
there's not?
Yeah.
So
yeah.
you
We're-
really can.
So Spanish is a
written.
phonetic language, and
Yeah.
English is not.
And behind the camera
fact.
is Dean. So thank you for
Yeah.
that. So we want to get into, I guess we agree on people should use people like us. Because investing is and to me anyway, it's as important as,
It's a people business.
well, it's a people, but it's as important as your health.
Yeah.
It's as important as a doctor. Right?
Totally.
So don't mess around with it. Don't guess. Don't listen to everyone's advice. Get a professional who knows what they're doing.
Yeah.
Right? And lock it.
Absolutely.
So, how do you know when someone, what are the tips to find out if someone really knows what they are talking about? Because I have a friend who's puts everybody in annuities. He says, I'll just put it in here, you'll be fine. Or do this, you'll be fine.
Yeah.
It's how do you?
That's how you know. People make general statements like these blanket statements. I think that's the first clue that they probably don't know what they're talking about. You can never say, put them in an annuity. Maybe that's okay for a portion, but in most cases it's not. You can't make blanket statements like that. That's like me saying, put everybody in foreign equities. Everyone right now. Like maybe this guy is not. That's not good for him. Maybe this guy it is. You just need a little bit.
And how important is rebalancing?
Oh, super.
Yeah?
Super.
And
I
what
do
is-
it. Yeah, we do it all the
Yeah?
time. Yeah, it's a great risk. It's a risk mitigation strategy.
And explain it.
Yeah, so
Put it-
let's say, I always illustrate this way, because clients, you hear that word rebalance, and on the one hand, it sounds intuitive, but then when the more you think about it, you're like, well, what does it actually mean, right? So this is how I talk to clients about rebalancing. Let's say you have a stock portfolio, 50% stocks, 50% bonds.
Okay.
I'm sorry, I meant portfolio. 50 stocks, 50 bonds. Let's say the stock market does really well. Stocks go to 70%, and now bonds are 30, okay? You're no longer 50-50, you're 70-30. So thus, you're more at risk than you want to be, right?
Right.
So now let's say you head into a market downturn, you're going to go down more than you had thought you were going to go down
Because you have more stocks.
because you have more stock.
Yeah.
So
the
rebalancing automatically, sells off that excess return and
Right.
reinvests it into the lower.
So it sounds like automatically what you're doing for people is you're selling high because the market, and
Yes.
you're buying low into
Exactly.
whatever strength.
Exactly.
Which is the kind of goal for investing.
Exactly.
Right.
Exactly.
So the portfolio mix kind of determines your downside risk,
Yes.
right?
Yes.
And so it sounds like for what you're saying, by moving, if you get from a 50-50 to a 70-30, that your downside risk has increased. Is that
Yeah.
right? Okay.
Yeah.
And so that's why you want to rebalance to get you back up to the downside that you expected.
Exactly.
Okay.
Yeah.
That makes sense.
Exactly.
Okay.
Yep.
And
Yeah.
and I love that part when you do that, then you're automatic, because that's the goal, right? Sell high, buy low,
Yeah.
and by rebalancing, that's exactly what you're doing.
Exactly.
Yeah.
Yep.
So you're taking it from each asset
You're
class.
systematizing it.
I love systems.
Yeah.
Yeah.
You're
Systems
systematizing
work.
it. Yeah.
Yep. They all.
Yep. Yeah. You're not trying to outguess.
There you go.
Yeah.
It takes all the emotion out of investing.
Yes.
Because the rebalancing is kind of counterintuitive, right?
Right.
Because you're buying stuff that has gone down when you're going, Why would I do that?
Exactly.
This horse is winning. Why don't I ride it to the finish line and buy more?
Exactly.
And
Because otherwise, it's just a guessing game.
yeah,
Yeah.
So if you're buying this horse he doesn't always finish first,
Right.
And then you've
Exactly.
thrown all your money into because we know everything that goes up has got to come down.
Yeah.
So you need to take advantage of those down markets to increase your wealth.
Exactly.
And you can accomplish that by your rebalancing.
Yes.
I like it.
Yes.
I like it.
Yeah.
So you think how does someone determine what their downside is? If I say, I have no idea, I don't know what my downside is, how would you help them with that?
Well, I think we translate to dollars, right? So if someone comes with a $100,000 portfolio or $1 million portfolio, what I think is smart for you to do is translate, because percentages seem esoteric.
Yes.
Well, your downside is 15%.
Yeah. Yeah.
Whatever.
Okay, I can do that.
Yeah. But if you translate that to math, $150,000 on $1 million portfolio, that makes sense.
Yes.
$150,000.
Yeah. So I had a young woman come in and see me. She was in her 70s, and $1 million, right? And so I'm showing her their portfolios, and I say, yeah, sure. This portfolio, the downside is historically, right? Can't guarantee it, but it's been around 30%. And
Yep.
this one over here historically has been down around 10. So the returns on this are greater. This is around 7, historically, and this one is lower.
Exactly.
Which one do you want? She goes, oh, I'll take the one with the higher returns.
Exactly.
And I go, really? The downside risk on this is somewhere around 30%.
Exactly.
Oh, yeah, I can do that. Really? Okay, well, so let's pretend you have $1 million. Okay. And now your $1 million, it's gone down 30, it's now worth 700,000. How do you feel?
Yes.
So I'm looking at her and you see a little bead of sweat come up, and start to, and I said, I don't think that's the right portfolio for
Exactly.
you. I think you should, because if your 100,000 your million goes to 900,000, do you feel better there at 700,000?
Exactly.
900. Well,
Yeah.
then that's not the
Yeah.
portfolio for you. We should be looking over here.
Yes.
So putting it into dollars,
Yep. Yeah.
you're right. It helps.
Because then that conceptualizes the potential downside.
Yeah, and people can calculate it. Well, they can calculate that.
Exactly.
Yeah, I like that. Well,
Yeah.
good for you.
Absolutely.
Yeah.
Yep.
So, what is the biggest thing that when people come and see you, how do they start with? Hi, I have this money, or how do you deal with them? What's
there's
the
any
first
number.
thing?
There's any number of scenarios of why they come in and see us.
Okay.
The retirement, inheritance, bonus, lottery. We talked about lottery, but that's never happened
I know.
ever.
Yeah. But we keep buying.
Although, yeah, I don't know if you know this story, but it's like 15 years ago. Some guy called me. He'd heard my name, and he had been on a game show. Yep. I think like Jeopardy.
Really?
And he won like $100,000.
Oh, no kidding.
Yep.
How cool is that?
So that was like my version of someone winning a lottery.
What happened with it?
I didn't
he-
actually get him as a client.
Oh, you didn't?
No.
Oh.
Yeah.
You know why? Because he didn't.
That was 15
He
years
didn't
ago.
sit back. He didn't calculate everything. He didn't get away from the
Exactly.
noise. He didn't.
Exactly.
You know what? He called his attorney, and his attorney made him. I'm sorry. I'm messing with you.
Exactly.
Yeah.
I like it.
Yeah.
Yeah.
Yeah. So, where we come from, you've got to set a goal, and I think that goal, getting back to your point, is somewhat intangible. If you just kind of say, "Well, I want to be rich." What? I'm investing in it because I want to be rich. Well, what does that mean?
Right.
You do have to qualify that and quantify that. You got to. What does that mean?
Totally.
So what I like to come up with, and the workbook and everything else, is that goal is simply just replacing your paycheck.
Yes.
I don't need. Well, it's a place to start.
Yeah.
Just start there, then we can whittle it away to all these other things that you may need or want.
Exactly.
So that gives us and them some focus, and then also brings in that 4% withdrawal rate.
Yeah, you go back to that.
Yeah, now
Yeah,
we can go back to that and
exactly.
figure out, you do the reverse, right? So what does that mean? How much is your paycheck? It's $100,000 a year. Okay, so
Yeah.
to get $100,000 a year,
Divide by 4.
you multiply by 25.
Okay.
Yeah,
Right.
25, because 25 is the
Inverse,
division
yeah.
of 4. Yeah,
Right,
it's the inverse.
exactly.
Yeah. So 25 times 100,000 is 2.5 million.
Wow, yeah.
4% on 2.5
Right.
million is,
So you reverse engineer it.
yes,
Yeah.
is 100,000.
Yeah.
So we can tell these guys you need
Yeah.
2.5 million. So
Right.
if you're winning the lottery or Jeopardy or whatever, you want to set it at least that much aside to
Right.
for your livelihood.
Yes.
Then that extra money, see, that'd be 2.5 million. How much did they win on the lottery? 100 million? I don't know. Pick it
I
up.
think it was $1 billion.
Billion. That's right. It was the
It's like
billion.
1.1 billion.
Then
I
you
don't know
have
if
the
we
rest
even
of
know who
that.
won that yet.
I didn't even know it happened.
I mean, yeah, someone won,
Yeah.
but we don't know who. Means they were smart. They're probably meeting with their advisor right now.
Yeah.
Call back.
And I'm impressed if the media did not release that too. I don't know
if they
who's
can,
in charge
can
of
they?
that.
I don't know.
I don't know how that
I
works.
don't either.
Yeah.
Yeah.
I don't know if
Maybe it was me.
maybe you want it. You should come see me.
That's right.
Before
I'll
your
see
attorney.
myself. I'll self-reflect. I'll self-reflect.
You can set up a mirror and
I'll meet with myself. Exactly.
that would be funny. And then
My goals.
yeah, replace
Right.
your paycheck.
Yeah.
Yeah. I don't.
Although I would still work though, like I said before. I'd
Oh,
continue
yeah.
working.
Yeah. Don't you love this business?
Yeah.
We talk about it
Yep.
in the gym.
Yeah.
We talk about. We just love what we do.
Yeah.
It's great. We get to meet all kinds of people.
Yep.
Uh,
We're in
and
the people
help-
business,
Yeah.
ultimately.
And we can help solve a lot of
Issues.
yeah. Yeah. See issues rather than problems, but
Well,
issues,
they're not
yeah.
problems.
Yeah.
There's no problems.
Yeah.
Challenges.
Yeah. There you go.
Yeah.
Opportunities.
Opportunities.
Ooh.
Yeah, there's no problems.
Yeah. Yeah.
Yeah.
So we help solve all those things.
Puzzles. They're like puzzles.
Yes.
Puzzle pieces.
So I've been in this a little bit longer than you.
Yep.
And the beauty of the longevity in this industry is you can actually see the 4% rule and other things actually work.
Yes, that's true.
Yeah, so
That's true.
10 years, 15, 20 years down the line, you
Right.
can look back and say, whoa,
Right.
you invested 2.5 million.
Yeah.
You took out your 4%.
And you're still
now,
at-
Yeah.
Yeah.
Well, now you're at 3.5 million.
Beautiful.
Yeah. it's
Beautiful.
Lovely.
Yeah.
Yeah.
It's fantastic.
So it's the successes are great. And when doesn't it work?
When what?
The plan. When you come up with a plan.
Oh, if they don't follow it.
Yes, there you go. Yeah.
If they don't follow it.
Yeah.
Yeah.
And what
Which
do they-
can happen. You know, at the end of the day, it's we make the recommendation, and most times they follow it, but sometimes there's a potential that they don't.
What usually starts happening?
Life.
Yeah. Yeah.
Right. I mean, a change of job, for instance, or they move, or the remodels, or
They start spending more than they're earning.
exactly.
Is that it?
Yes.
Okay.
Yep. It's like things deviate. We just got to put them back. It's like a line. They'll go this way. They'll overcorrect, undercorrect, overcorrect, and we just got to put them back
Keep
to.
talking to them.
Yeah. Exactly.
Yeah.
Exactly.
Okay.
Yeah.
What I have found as well is they get a hot tip or the investment strategy of AI.
Right.
AI
Yes.
is doing so well. Let's take the entire portfolio and put it into that.
Right.
That can just really blow
Yeah.
a strategy
Totally.
out. Yeah.
Totally.
'Cause
Yeah.
We've seen that. Well, I have. I've been in this a while longer. The .com
Yeah.
explosion.
That's right. In the late '90s.
Yeah.
Yeah.
99, 2000. Because then, and
I
also,
just graduated from college, '99.
Did you?
Yep. I remember that.
Yeah, I think I was changing your diaper somewhere. around like that, yeah. So the
Now we know how old I am.
at that time too, large cap stocks were just killing it.
In
Doing
99.
great. Yeah. Well,
Yeah,
that whole
I imagine.
for that whole 5 years, from 95 up to then.
2000.
And then people couldn't
Yep.
wait any longer. Sell everything else. And
That was a brutal.
Yeah.
I wasn't in the business yet, but I know that was a
Yeah.
brutal
So
sell-off.
they all went, they sold off and went into, even though they did well at that, they went into .coms, which was the rage then.
Yeah.
Even though Larson did very well, they went into that and then sold all of international, because I think international at that time was struggling as well.
Right.
So everyone concentrated into one asset
Yeah,
class.
exactly.
And then immediately they got just slammed.
Absolutely
It was
slammed.
terrible, yeah.
Yeah.
Had they rebalanced, because that would have been one of the asset classes, those things.
Right.
Maybe not,
Yeah.
because they weren't making any money then.
Yeah.
It was just the rage. Kind of like AI. AI is going off the charts right now, but from what I'm reading, it's not profitable yet. They can't figure out how. It will someday, right?
Right.
Just right now, they can't figure out how to make
Monetize it.
Yes.
Right.
Yeah.
Right.
So
Yeah.
by concentrating all your wealth there to something that isn't giving you the returns,
Right.
not a good idea. So how do you feel about gold, silver, coins?
Yeah, I'm not against it. It's certainly part of someone's net worth. I mean, I have lots of clients who've inherited actual coins.
Yep.
It's fantastic, great.
Yep.
But certainly I would never recommend they put everything. That's not what we do,
Right.
right? And it's a potential hedge against inflation. But again, coins, we don't do it. We don't do that. We don't sell coins.
And that was the kind of answer I was looking for instead of that other thing. For me, it's a no. You don't do that, because what makes a stock go up? This is a quiz.
I mean, a lot's earnings, good earnings.
There you go. We
Yeah.
can just stop with that.
Yeah.
Earnings.
Yeah.
Earnings.
Yeah.
How much earnings
Right.
does gold earn?
Gold's a currency. It's not an investment.
Exactly.
I always say that.
Yes. So
What differentiates it? Investments have cash flows. So real estate's got
Earnings.
rents.
Yeah.
Stocks have earnings.
Right.
Bonds have interest.
Yeah.
Gold doesn't have that.
No.
Doesn't make it bad. It's not an investment. It's a currency.
Doesn't
differentiates
right. So
It's a semantic issue, maybe.
well, it's a fact that they don't have earnings.
Yeah, exactly.
So what makes it go up and down?
Interest rate differentials, currency fluctuations, inflation.
It's fear and greed, right?
Right,
Makes
but
gold
yeah,
go,
yeah,
I mean, it goes.
yeah.
Everybody goes, and then everyone comes out. The market's going to crash. You got to get stable. And
Right.
So
I
it's
mean, there's
fear
certainly
and
other variables that
Well,
surround
yeah,
that.
but I think
yeah.
those are minor. I think the
Right.
biggies are fear and greed.
right.
Yeah, and that's
Yeah.
drive that home, and so it gets everyone afraid. They move to gold, or gold's going crazy. And from what I've read, gold has never outpaced inflation since the 1800s.
I don't
you aware
know.
of that?
I'm not personally aware of that.
Okay.
But
so you need.
I don't not believe you.
You need to do more reading, I guess.
I guess so.
Yeah, because you
Yeah.
haven't been in this as long as I have. Hold on.
I'm a little bit younger. Just a little bit. But we both go to the gym. That's good.
That's right.
That keeps us young in spirit.
We're going to sign off. We're going to come back and do another. So thank you for being here with us. We do appreciate you. This is Francisco with Ameriprise. Dino's behind the camera. I'm Robert Lettin. Come back and see us. Thank you.
We're at the hard hour, man.
Are we?
Yeah.